Looking at the bond purchasing program, or known as quantitative easing 2, there's a lot of concern that we could see quantitative easing 3. Others say it is a concern if we do not see quantitative easing 3. Where do you stand on this?
Well, I think that QE 1 and 2 have been a significant success in as much as it's stabilized the system, which was at fault. Yes. The reasons for that probably originated in the banks and in the institutions, and the taxpayer has borne the brunt because it suits, the world's done the right thing, but it suits the politicians to be able to use a central bank to print currency to alleviate the immediate pressure of a complete meltdown and a lack or a loss of trust in the system itself.
Do you think there has been a loss of trust in the system?
I think absolutely, but I think that there's been a sort of almost a breath of relief to say that at least it hasn't manifested in the collapse of markets, in the collapse of the very institutions, never mind the shares, in the very institutions that act as the vestiges of and the safekeepers of our monies, the banks. And there's a lot of talk now about in the UK, there were headlines around, should you move corporate banking and normal high street banking into different places with different rules and accounting processes and so forth. There's probably some grounds for a good debate there.
Well, the bulls out there would argue that we avoided a deep recession. So what happened with central banks on a global level is that they were very brave to come to the fore and come out with such aggressive strategies to loosen monetary policy, and this is why we have an engine that is working quite well. The bears would say the engine is only working because of the ultra-loose monetary policy, and once that's withdrawn, everything is going to collapse. Do you think everything will collapse?
Well, there's a major risk of people running for cover, and in fact, if you just look at the purchases of gold right now, the governments that used to buy dollars and used to buy sterling or euros are now restocking their vaults with gold. So if it starts at central bank, where you've got some pretty smart people pragmatically looking long-term, buying bullion, then maybe there is something there which the man in the street needs to be sensitive to.
Isn't that because of negative real interest rates, and this is why we're seeing buying into bullion?
I think that, they're not negative real around the world. So, for instance, in South Africa and Australia and many other economies, you get positive rates. In the US and the UK and Japan, you could argue negative real. But that's not true across the board. What it is do we have all our eggs as a government or a country in one basket? And probably the answer is no.
So in terms of your investment strategy going forward, with regards to South African bonds, inflation-linked bonds, South African equities relative to developed market equities, where would you put your money? I mean, you mentioned gold. Is that the safest place to be right now, or is it too late?
Well, gold is great, but gold is a problem because it doesn't pay a dividend. It doesn't got any cash flow. And NFB, in my view, personally, and my companies, I think in broad consensus, although I have a very robust committee of people around me that argue the toss, is that gold does not have a coupon. The cash flow of dividends, the cash flow of a yield on interest, the cash flow of a rental on a property are critical components of the overall return on that asset over its lifetime. So you can buy gold, but it is a cyclical thing. It is a store of value. It could be a long-term store of value, and it's done very well capital price-wise, but it doesn't pay any interest or any return. You probably pay the bank or the place that you bought it from to hold it for you and keep it safe.
With regards to the sovereign debt crisis, which is still ongoing in Europe, and we thought we had put it to bed because we thought that restructuring of some of the peripheral countries' debt would be obvious and it would be inevitable. It's come to the surface once again. Why do you think that the market is making such a big deal of this once again? Do you think we still have those underlying worries?
Without question, there are major issues there. So from an economic point of view, from a people's the sentiment at ground level perspective, from an intergovernmental level, from an interbank and regional level, there are definite worries and concerns. Even to the point where you've had discussion at sort of conference level over the euro and the euro, the northern euro and the southern euro. Could that be
economies?
Yeah, no. But the problem is that if you, for instance, invested in a southern country in the euro in a deposit, and for some reason they delinked, or it became almost fact, and sort of there was a risk of a delinking of a currency. You can imagine the losses that could be incurred. So people might move out of that country in anticipation of that split and go into, let's argue, Germany. On the contrary, if Germany, with its strong economy, with strong numbers, with a huge fiscal kind of a discipline compared to some of the southern countries, maybe you'd want to put your money into a German bank in euros rather than a Portuguese or other southern European country. So that dislocation is real, it's live, it's being painted over by different with different political and economic agendas, but it's very much there.